is the Business Breakfast
on DubaiEye 103.8.
So, as expected, the Federal Reserve raising interest rates overnight. Let's hear from Jay Powell. This is why.
The intermeeting data on inflation and the labor market came in stronger than expected. And really, before the recent events, we were clearly on track to continue with ongoing rate hikes. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words.
Let's get some reaction now. Keith Fitz-Gerald is the principal at the Fitz-Gerald Group, joins us live. Morning, Keith.
Hello there, and good morning.
Or good evening, I should say to you, because you're in Seattle on the west coast of the United States. What did you make of first of all, the decision to raise rates?
Well, I tell you what, I'm just one individual, but I think it's the wrong move at the wrong time. You know, the fact that the chairman came out and said he has the American confidence, I'd love to see what numbers he's reviewing, frankly, because everybody I talk to on Wall Street, off Wall Street, on Main Street does not share that viewpoint. And in fact, thinks the Fed is making a terrible mistake by destroying millions of hardworking people's lives and savings.
So why do you say that? Talk me through your logic. I agree with you, by the way, but talk me through your logic.
Well, the logic is quite simple. I believe that the Fed is continuing to try to raise rates because it does not understand that its models are broken. It does not understand modern financial theory, and it can't admit it's wrong. So what we've got is a situation that is akin to putting blood in the left arm and taking it out of the right. There's really no change as long as our government continues to spend money. The very definition of inflation is more dollars chasing the same amount of goods and services. We actually have less goods and services, so it's compounding the problem.
So what would you do instead?
Well, I tell you what, I'm a businessman. If I were in charge of the Fed, I would pause. I would reassess what's going on. I would put a detailed examination in place to figure out why the models aren't working, exactly what needs to happen to prevent them from breaking down again. And then I would speak directly to the American people about how we're going to fix this and why we are really going to make an effort at it, not just talk with the usual catchphrases and pabulum.
Okay, so for better or worse, rates have risen, and they're raising here in the UAE as well because we're pegged to the US dollar. So our central bank followed suit within minutes of Jay Powell making that announcement. As investors, and you advise investors, how do we play this? This is the reality. This is the hand we've been dealt. How do we play it?
Well, that's actually the interesting part, because situations like this, history is very clear about. It shows that this is one of the few advantages where individual investors actually can capitalize on the chaos. Things like energy are not going to go away anytime soon. They are tremendously inflation resistant and recession resistant. If we have big tech, for example, that is not going back in the bottle either. That is going to be with us for many, many, many decades to come. In fact, I would submit that big tech, specifically Microsoft, Apple, companies at that level are going to be comparative safe havens because they've got powerful margin protection, products that can change the world, and clients are running to them, not away from them.
So, well, let's take Microsoft, one of the stocks you mentioned there. And of course, it's on your doorstep in Seattle. Share price peaked back in 2021 at $336. It's now $272. Is that a buy at the moment, would you say?
Well, I personally own a rather large slug of it. I hope I'm smart enough to buy more. So, yes, I do think it's a buy. I'm playing 3 to 5 years out. I think $350 a share is reasonable, particularly when the Fed blinks or at least pauses. I think they're going to reach that point in June or July when they have to admit they're wrong because the mountain of evidence continues to build that they are.
Would you be buying the tech sector in general and buying big tech, FANGs, call them what you will? Or is it very stock specific? The other one, of course, on your doorstep is Amazon, based in Seattle, but many others on the West Coast. Brandy Scott is currently in San Francisco at the moment. If you go a little bit further south from where you are, would you have your checkbook out?
Well, I tell you, I'd have my checkbook out for Apple. I would have a firm pass on Amazon. I don't own that one. I think it is not the same since Bezos stepped out and Jassy stepped in. You've got to be very, very selective because not all big tech is the same. To borrow a term from Peter Thiel, you can't just go N+1 and improve an existing business, which is what Amazon did when it came to the forefront. You've got to go 0 to 1, which is what Apple's doing, which is what Microsoft is doing. You've got to change the world, and you only get a shot at doing that once.
So, outside of the tech sector, what are you liking at the moment? You mentioned energy there. Are you a buyer of energy stocks at the moment?
I am. Chevron is another key holding of mine, and that's one I look to add to and reinvest in, because there you're talking about not only petroleum products, but you're talking about a spectrum that spans the globe, quite literally and figuratively, in all forms of energy. So it's not just dinosaur juice, for lack of a better term. It is everything from fusion to algae to wind to solar. People don't understand just how far forward thinking that particular company is. So anybody thinking just in terms of petroleum is missing what I would submit is a very respectable future set of profits.
Now, I'm nervous about holding those kind of hydrocarbon companies, as I would call them, in my portfolio for my retirement. I'm 50. Let's say I retire in 20 years' time. I get that they're very profitable today, but with energy transition happening, it's not going to happen overnight, but it may well happen in my lifetime. Am I right to be concerned, or are my fears misplaced?
Well, I couldn't obviously tell you your fears are misplaced because fear is very real. Everybody has it. I have my own set. The question I would respectfully ask you to think about is, we are going to need energy. The only question is in what form. Scientists I've spoken to, even the most aggressive of them, estimate that it's going to be decades before we can transition away from petroleum into electric, into solar, into all these other things. Meanwhile, we've got to continue to develop those technologies, and they're getting more and more sophisticated and more attractive by the day. So to me, it's not an on-off switch, pardon the pun. It is, in fact, a continuum, something you've got to think continuously about, because the reality situation is when you and I, both 70 and 80 and 90 years old, we're still going to need to turn the lights on. We're still going to need fresh water. We're going to still need to get from point A to point B. So energy, as far as I see it, is going to be needed.
What about dividend-paying stocks at the moment? And I know energy companies traditionally are, and dividends is something that you look at very, very closely. Where do you see good dividends at the moment?
Well, energy is certainly one place because, again, you want to pair this with products and services the world can't live without. So water companies are great. Energy companies are great. Typically medical development companies, things like Pfizer, for example, Gilead, those are companies that continue to produce large amounts of growth, large steady cash flow over time. Chevron, of course, is a key one. So it's a sign of continuity in what is likely to happen as opposed to what might happen. So dividends, to me, dividend stocks show that they traditionally fall less, they stabilize first, and ironically enough, they tend to recover fastest when the markets do get onto a good foot again, and they will.
20 seconds left, crystal ball gazing, this time next year, when we're speaking in March of 2024, where do you think interest rates will be headed, higher or lower?
Oh my goodness, I am not smart enough to figure out. I'm going to have to watch your show.
Look forward to it, Keith. Appreciate your time. Thanks for staying up late to speak to us. That is the voice of Keith Fitz-Gerald, investor based in Seattle.
DubaiEye 103.8 present. Of independent